Dabur numbers at the bottom of the screen, so let's just quickly take note of that as well. Revenues have come in at 2678 crores or so. There is a domestic volume growth of 1% as compared to I think there is a...
So the volume actually is right in the middle of the range, because the range was -1 to 2. The profit is the disappointment over here. The revenue is in line for Dabur. Profit is, I think, well shy of estimates, because our expectations on profit were 350. I think they've delivered close to 300 crores. There's a 50 crore miss on profits. Revenue is in line. Volume growth is 1%. So it is in the middle of that range that Mangalam was talking about. But we have to see what caused that dent on the bottom line. That's the disappointment. I think
last quarter also in Q3 also, maybe it was Dabur, was a shocker of a number.
They had a one-off expense in Q3. In the prior quarter, there was a one-off expense which had taken place.
So we'll maybe we'll have the margins up as well in just a bit. And Mangalam will join in as well.
Mangalam's poll actually is saying that we're expecting quite a significant dip in margin. I mean, almost 150, 200 basis points dip. Let's see if they can beat that. EBITDA is in line.
The margin dip that Mangalam is expecting is because the company itself had given a cheat sheet, as he called it. So in their Q4 business update, Dabur had said that expect the operating margin to be lower by 200 to 250 basis points on a year-on-year basis. So this is what the company had already guided on the margin front. So the question is, if that's the case, what happened between the operating line and the bottom line? Because the bottom line clearly has come in as, quite... Okay, there we have the EBITDA number as well, 410 crore, falling shy of our estimates. But the question is it that much of a miss, which explains the bottom line? But Mangalam, take us through this, the Dabur numbers, and start off by telling us what led to the profit miss.
Well, what led to the profit miss in Dabur this time around was the EBITDA. The EBITDA margins of the company have come in at 15.3%. The street was bracing itself for a 200 to 250 basis points margin decline, as the company had indicated in its quarterly update. But this time around, the margin decline has been around 270 basis points. And that has led to a further decline in the net profit as well. So the net profit is below our estimates on account of that. As far as the volumes are concerned, no problems. It's 1%, much in the range of what the street was anticipating. But the company's commentary here is largely because, the volumes were 1% because consumer downtrading and to affordable packs and low unit packs on account of price sensitivity meant that they bought a 300-gram pack as against a 500-gram pack, and that's why the volumes are just about 1% higher. If you just take a look at the other details of the company as well, they've seen oral care growth to be about 15.8% in terms of market share. Hair oils business also reported a market share at 130 basis points. And the market share of the company in its air freshener category increased by 140 basis points. But the international business saw a big decline in their margins. That's translational largely because of despite a 90% growth in Turkey revenues, the currency depreciation meant that there was a further decline in the EBITDA margins as well. So a large part of the EBITDA margin decline can be attributed to translation losses in their foreign business as well. The company has recommended a dividend of almost 2.7 rupees per share. Does not account for too much in their overall scheme of things, but the margin miss is something that the street does not like.
All right, Mangalam, thanks very much for that. So that's Dabur for you. On your screen now, stocks at about 529, down 1.5%.